following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, and even a tired host. One of my data suppliers for options gave up the ghost this weekend. I've been feverishly trying to overhaul some of what I've got into a new data feed. I'll have it back up tonight. I almost had it done before the show, but I'll get a better idea, and my new data feed will actually allow me to get it before 8 o'clock at night, so I'll have a much better idea on what options are at least telling most of us. As we start this show today, 21.25 on the S&P cash, off 7.5 points, 1.7 billion shares, so volume is light. But again, I am expecting that we get to 2090, and I'll have a better read on that tomorrow once I get my new options feed up and running for my option software that I wrote myself for options expiration. But pretty much into the end of last week, 2090 was still a target. The question is, and many people, maybe I'll talk about it more, but the idea is that volume, the markets generally follow volume. And I've brought this up before, and that is off the bottom and off the top. You can see quite significant moves before volume comes back in. We went to a slightly higher high, 21.35. It's kind of flat on the day, maybe a little higher earlier in the day. But even off the bottom, what was it? I'm pretty sure it was the 786 low in, was it 2003 or 4? In the S&P cash. We didn't have volume till 1,000 or 1,100. Didn't stop the market going up with no volume. Well, we had a lot of volume after that. But what do you have? And that is big changes in the market off of big signals in the market. You've got to have a little patience. You got to have a little faith. And we'll pick up on what we were talking about Friday with the IBB. Probably the mistake I made with that is not going out to November. But, man, what I cleaned, $6.70 to $32 on the options. So that's kind of my first decent home run of the fall for options. Of course, your options can go all the way to zero. So make sure to not add more risk. Options are to reduce risk if you do them correctly. Most people think, I can buy so much more. If I'm right, I'm going to be that much more right. Options are a way to reduce risk if, one, you buy them when the VIX is low, with implied volatility is low. The downside is most people start playing them once the markets really start moving. And guess what? The VIX is high. So is the implied volatility on the individual stocks. And your chances when you see the implied volatility of a stock over 30 and you start seeing the VIX over 18, your chances of making money rapidly go to zero. But thank God once the VIX picks up, you can actually start playing stocks because the volatility is back. We did some action out here. We'll talk about that. Oh, I actually did talk about that. I picked up and finished my order for the IBB. We'll talk about how I did that. It's not normally you just buy and you sell your options, but sometimes the option market makers just step away from the pole and won't give you a decent fill. We'll talk about what you should do then. Just a whole bunch of stuff going on out here today. Everybody thought that the election was over. I was told that most vigorously last week. If you look at even some articles on CNBC today, they are basically saying what I said before, and that is the election is a dead heat. We've got, of course, always new factors coming out in the election, which should keep volatility in the market high. The last debate goes on Wednesday night, but man, what can you say? We'll get into the news here in a second, but now we find out one more time that the State Department was bribing the FBI to change stuff in that email scandal. Who knows how far it goes? No one knows right now. Certainly goes to the head of the FBI. So maybe he's going to get amscrayed on the down low here when everybody finds out that he didn't say anything about his chiefs and officers and his, they're not detectives, special agents being bribed by cushy jobs where they make an extra 50, 75 G's a year by going to foreign embassies. If they would just look the other way, if they would just reclassify stuff. And that is why my slide today says politicians and diapers must be changed often and for the same reason. Anyway, we like to meet always at this time.
The following takes place between 2 p.m. and 3 p.m.
Wow, something happened there.
That it's all just a little bit of history repeating.
And we've got history, and then we got some questions already in my email, and in the den we'll talk about that. In 1973, on this day, the Organization of Petroleum Export Countries, or as I like to call it with Andy Heck, OPEC SMOPEC, implements what it calls oil diplomacy. On this day in 1973, it prohibits any nation that had supported Israel in the Yom Kippur War with Egypt, Syria, and Jordan from buying any of the oil it sells. The ensuing energy crisis marks the end of an era of cheap gasoline and caused the share value of the New York Stock Exchange to drop by $97 billion in one day. In turn, ushered in one of the worst recessions in the United States has ever seen. And, of course, I don't know. Has our energy policy ever really become any clearer? It's always been rather murky with lots of people paying everybody off, more corruption. And, of course, what do we have? Well, thanks to WikiLeaks, we know that the Saudis and others over there actually have been financing ISIS and ISIL, but never caused any problem with politicians here in the United States taking their cash for the election. Very interesting. Anyway, not much going on in the news other than Mr. Fisher was out talking a little earlier today from the Fed. He was a little hawkish. I don't know. I think I tried to listen to it for a while. He was basically putting me to sleep. But we'll get to the questions in the den in a minute. I've got some questions in the email. We'll talk about that. Then we'll get right into some charts. But we'll talk about a bigger picture with volume, and that is coming up in the next segment. You're waiting with bated breath.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And back to a good question in the den. And how do ETFs get taken into account for the main index's volume? And that depends on what volume you're looking at. Remember, I quote on this show, for the most part, what is known as the consolidated tape. That is the New York Stock Exchange, the Amex, and all of the stocks in either one of those indexes or trading floors that actually are traded on the ECN. You find these ETFs rarely traded on the electronic commerce networks. So depending on whose volume and what volume you're looking at, it certainly depends on where the ETF is. If the ETF's on the NASDAQ, then it doesn't matter where it is. The volume is in there. It has to go in there. There's no way. But if you're looking at maybe the volume for the New York Stock Exchange, which a lot of people quote, and comes in at 700 million or a billion shares one day or something in that neighborhood, then basically you're talking about most of the stocks, and maybe 25% of New York Stock Exchange shares are actually traded across the floor. Most of them are traded on ECNs. You can see that the price to actually trade per share can be 10% or 15% of what the New York Stock Exchange folks have. There is a reason to trade on the NYSE, and that is mostly when you have a very big block transactions. They will route your order without screwing up the market. Some people call these things dark pools. Eventually, there's several ways these things get back. But the New York Stock Exchange and Amex is very different than the NASDAQ. The NASDAQ is one true market, whether it's an ECN or the NASDAQ itself. All the volume is reported, and it is spurious. And you could not see the volume of an ETF if the ETF actually resides on the NYSE. One of the things is if you have a very volatile ETF too, because it costs so much to trade on the NASDAQ, if it moves a lot, you won't see that volume come back in to the NYSE floor traded volume. And so you get kind of a difference out there. Generally, the NYSE is a big enough sample size to be significantly, statistically significant. One of the reasons why I do use the consolidated tape, which is all of the New York Stock Exchange, Amex, and ECNs. Anything that's listed on the New York Stock Exchange or Amex actually comes into that consolidated tape volume. So you got to know what you're looking at in the volumes, especially New York Stock Exchange, Amex, whether or not those ETFs are actually listed and where they're listed. And of course, how it, some of those ETFs, although on the NYSE, actually trade NASDAQ stocks. So it's kind of a little bit incestuous. It's kind of hard to figure out. Some guy actually told me this, one of my brokers in the early days. He said, you know what? You dump too much salt in the soup. We can't take it back out. There's no way to figure out what's salt and what's soup. You just have to like double the amount of soup. So probably the easiest way for me is just to look at the broader indexes with the most volume. But there's only one volume number for the NASDAQ, but there are several for the NYSE. So just be aware of that. Trying to think if anything else is going on out here. No. Other than I didn't know it was that easy to bribe the FBI. What do we have going on here? I wanted to get to the charts here fairly early. And we wanted to talk about how volume doesn't automatically come in at tops and bottoms. And these are long-term tops and bottoms. This is something I picked up from my friend Tim Ord, although always known as the Ord Oracle. He's got a book out, and if you want to learn about trading in very long time frames, years, about buying and selling, pretty good book. Most people have a hard time sitting on something for 2 or 3 years, and but I learned a lot, adapted some of the stuff that I use today from the longer term to kind of a more of a medium term, and even shorter term. But for the most part, very long trading styles, 60, 90 days for most of the positions, 180 days, 1 year. Makes it a lot of kind of tough. Most people that are into trading, it's kind of hard for them to sit on their hands that long. But some of the stuff I learned was easily adaptable to shorter time frames. But I did enjoy especially a lot of the work he did on very long time frame stuff, because that is what we're looking at here. We've had some highs on significantly lighter volumes, repeated tests of highs. You've come off of them, and you come off of them with light volume, and nobody's shorting. Something I've been able to do is take some of the stuff that he's put together and, of course, put it together with my own stuff that I've been working on. It's been a year. I think it's been a year. I think it was a year in September that I started working on a question that Steve Rhodes asked me that had no good answer, which is, how do you really find out on a daily basis what short volume is? So I've worked diligently for over a year to try to figure that out, putting my own databases together and looking at everything else. But I am of a singular position now, and that is, for the most part, you want to short when no one's shorting, and you want to cover when everybody's shorting. That's been kind of a theme, at least for the last 5 years that I have data for. We'll find out how this works in other markets that maybe are not as manipulated as the Fed QE markets and all the other stuff's going on. But unless there's major heavy shorting, which I haven't seen. In fact, going into Friday, we had very light short interest. I continue to think that there's very little upside and a whole lot of downside. I've brought this up many times, and that is when there's a lot of people short, you pop the market a little bit, everybody covers. There's a lot of volume. They reshort again. Eventually, they wise up and quit shorting. And that's pretty much what I think has happened now, because with the exception of a very few stocks, and we'll get to Amazon, which I think is a little bit different. We've brought up that point, but we'll look at it for an example. You know, once you have very few shorts underneath it, the market can fall like a souffle very fast. So we'll get to some more charts here. We'll look at Amazon. I wanted to get to American Airlines because it's got a very interesting pattern up here with a light volume today. Got a lot of other stocks to look at. Give me a call at 877-927-6648.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And Kay asked me, what was that, on Friday, if I would speak on Friday about this article. And the problem was the article was written so poorly as to me having to dig through and find out actually what it was saying. One place in the article, it says that this has already gone into effect. Another place in the article says it's proposed. It is proposed. It has not gone into effect. But this new regulation would give powers to several folks, the Financial Stability Board, to actually cut off the ability for you to get out of a mutual fund. This has tried to be pushed through. Maybe this is the 5th time. They were trying to run this through back in 2001. So I don't know if there's anything new to it. It's never been able to go through. And of course, the government can always just close the markets anytime they want, which is something that they want to do and can do anyway. I don't know if there's any difference to this. I read some stuff about it. I don't see anything inherently changing. I would wait to see what happens. This is a lot of times they try to push this through right between Christmas and New Year's while no one's watching. So we'll keep an eye on it. But these things have come 20 times. Sometimes these things are just to rile people up to get donations for political parties. A lot of times you see stuff now that seems some kind of nutty. And it's just all about politics. But I wouldn't get too worried yet. I've seen this thing 4 times. It comes back every once in a while like a bad rash, but it's never been fatal yet or gone through. So we'll see. I'll keep an eye on it. But it says it's proposed. It says it's gone through. They've actually given the power to an agency to do it. But, of course, they have to go through the thing where they actually say what they're going to do and get people to comment and then actually make a ruling. And that last half of that thing is not done at all. The same thing has happened before, and nothing ever came out the other end. Remember Dodd-Frank? How long has that thing been around? That's been around forever. Less than half of Dodd-Frank has still ever been implemented. And that's where a lot of these things stand. Anyway, wanted to get to some other stuff. I got some email here about what's going on in the shorts. We'll talk about that in a minute, maybe at the start of the next hour or the next segment. What do we have now? We do have some stocks that are had kind of come up here and tested lighter volume. I'd been wondering whether this was not a good indication that maybe something was going on in the energy market. We're back down below $50 on West Texas today. If you listened to me last week, we talked about, we'll talk about GFI's Gartley pattern. I thought that gold would probably do a little bit better than crude, but I thought both of them had very minor upsides in either one of them. Mostly it's because of the Kay says hi. I thought we were becoming China, she said. That certainly could happen. So what do we have else going on out here? Okay, so we're looking at American Airlines. 13 million shares from September 7th. 39.52. We did go above it by 47 cents. Instantly closed back in that range. Tried to go up with volume of 14.7 million shares on the 13th. Down a little bit on Friday. Today got a little hammer out here, but a lot of these stocks, the more I look at them, continue to kind of show that they are ready to go back to these previous gaps. In this one, American Airlines, to me, you're pretty close to having a top out here. As the markets pull back, I would look for this to come back to $32. What else do we have going on? Astoria Financial. Noticed that we had some decent earnings, but no real movement in the stock price at least around the open for some of the stocks, the financial stocks. A little different out here. They really don't show as much weakness, and maybe that is a sign of higher interest rates coming. But these things are not really bounced, even though there's some decent volume or decent lighter volume underneath these previous lows. These things have not bounced. Normally, if you don't get a bounce in 3 days, you do end up with a gap down in the morning, and then all of a sudden the volume comes in. And some of these stocks, including the major indexes, I suspect that's what could easily happen in the next couple of days, and that is that we just wake up and we have a big gap down, a big gap away, and it leaves a lot of people trapped like rats, as they say. Cadence Design Systems, the software company, did test its high on about 2/3 of the volume. July 25th, we got to a maximum of 3.1 million shares. As we went into that high, pierced it with just 1.9 million shares on October 10th. Kind of gone a little sideways out here. Now, again, it's not uncommon to see these stocks at highs hang out on light volume until earnings day. So as we are moving into earnings season, the first thing that you want to do each time that you look at a stock is go figure it out. Now, October 24th is the earnings on this one, and that's where you see that very light volume hang out for a week or two going into it. But just check and make sure that you know where the volume is coming in, because these things can sit for 2 weeks going sideways at higher earnings levels. ELP, Emerson, Lake, and Palmer. Let's find out what this one actually does for this. What do we have? Gauges in the generation, transmission, distribution, and sale of electricity to industrial, residential, commercial, and rural customers in Brazil. This is going back to this big gap. Again, everybody's looking for somewhere to park their money. Electrical companies are there. This one actually fairly strong, but not much gravy left in this trade. My guess is that we get into this 1175 area where this gap comes back in that has acted as resistance back to the February 2nd of 2015. But that may be telling you what's going on, especially in the third world out here, is the safety stocks are still getting a lot of love. Callaway Golf, as we go into winter, kind of interesting to see that. Of course, always a lot of golfers down here this time of year. Weather's about perfect. But you had a nice gap up on Callaway. One thing would be the seasonality of Callaway. My guess is that this thing, like most stocks that depend on warm weather, would be something probably you'd want to buy in the spring. I haven't done any seasonal surveys on it, but any kind of retail company that, if you're talking about baseball equipment, I'm not going to be trying to buy that in the winter. Probably February is probably a good time. Anyway, nice gap up. I just like that it closed lower than the open back here on the 4th of August. But certainly you're doing it on very light volume. This $10 level looks like fairly, call it 10.75. Looks like fairly decent support. But again, I'm not bullish.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. Somebody in the den said take a look at love, and I love taking a look at love because this is an extra bearish chart, and it's about perfect. If you wanted to short a stock, this has just about everything that I want in one. I'm not saying that I'm going to short this. I've got other stocks that I like a little better, but if I'm looking for a pattern of what to short, this is beautiful. Either Friday or today at $42, I would have been all over this thing if I didn't have everything shorted. In fact, now that I'm out of one of my positions, I'll start looking at this. The reason that I like this so bearish is what I look at, which is the energy down and the volume back at the highs. This came down on monstrous volume of 34 million shares back on July 21st of 34 million shares. We've slowly come back up, 11 million shares Thursday. Friday, we had 7.2 million shares or 7.3. Today, just 3.3 million shares. So if you want to look at it as just coming in and coming out, but also this is something that my scan would probably have picked up. And I don't know why. I'm going to go back and look at it because this is exactly what I'm looking for. 8.5 down on my power law vector indicator number, 4.6 on the way up. If you're unfamiliar with this, it is my creation, which is a indicator for the energy between swings. It is set up very much like you pay for electricity. If you're running your air conditioner in the middle of the summer, it's drawing a lot more power than a blow dryer or a radio. And it looks at that. It looks for the energy, the absolute total energy, and how much is being consumed on the way up and the way down. And this is a 50% drop in the energy on the way back up. This is about as good as you get, along with the test, 2 tests now of a high of this gap back to $34. But yeah, this is about one of the best looking shorts I've seen. So thanks for pointing this out. Earlier, we did say we'd talk about Amazon. One of the things that, and one of my theories out here has been that they short stocks that are not easily squeezable. If you got a $30 or $40 stock, it's pretty easy to find a bunch of retail traders and maybe even some hedge funds that will short the stock because, of course, they want to make 20, 30, 40% if the thing goes in half. Of people that want to park their money in other ways, i.e., they're more than willing to give Amazon the next year or 6 months to the downside, you might find very big street names like Goldman Sachs, very large hedge funds that are looking for maybe 10 or 15% or maybe 20% at highs back down. In the case here, I suspect that if the massive shorting that we've seen in Amazon is setting up a move back to this giant gap between $600 and $650. But again, if you're new to the show, if you're watching this on Tiger TV, you will see these little things down here that look like matchsticks with the red part on it. The red part is actual short volume for that day and gives you an idea of just how much percentage there was. But Amazon, a all-time high for shorts. And that even goes back, I went back to 2000 when everybody was shorting this, when it went from $100 down to $10. That's called a haircut. You know, the wheel's going to fall off of Amazon. It isn't. I've given a speculation that maybe this pulls back, not on so much on decreased earnings, but them on spending a lot of money to develop their own Air Force to get away from UPS and FedEx. Amazon has become a company that is, I'm going to say that they're very much like Microsoft was in the 90s. There's nothing that they see that they think that they cannot absorb, like the Borg. You will be assimilated. There is nothing in transportation, in logistics. If you're fairly good, they either buy you or they do it themselves. And I'm thinking that Amazon's initial expenditures may take it a couple of years to get. Being a FedEx or a UPS takes a ton of cash to put those planes in the air. My guess is the savings will be worth it over time, but I would not be surprised to see moves down to this giant gap area of April 29th that had 10 million shares. And where you would want to buy this thing if you wanted to have it again. But the pros, in my opinion, are shorting this. And let's take a quick look out here. I will show you the man behind the curtain, which is my own app that I wrote for putting together short interest, or I wouldn't call it short interest. I would short positions each day. Now, this line right here under the stat one is the percentage each day of shares that were started with a short sale. Doesn't mean those folks went home short, but it does mean during the day they did it. We can assume that a lot of people were short very close to the highs. And since it hadn't gone that much higher and the size of this, you got to short $847. You know, you're probably not a retail investor. That made me, it was at least one of the factors that makes me think that we have a long-term high in this market, and certainly a medium-term high in Amazon, as long as they're going to continue pushing it. But one of the other things I do is I've created my own index that shows both in the NASDAQ and the S&P 500 how much shorting there is. And when everybody gets bearish, a good time to go long and cover your shorts. When everybody's bullish, a good time to get bearish and be on the opposite side of that boat. Not always does it work, but if you're always thinking like I do, which was very much colored by Nassim Taleb's book, Fooled by Randomness, I'm not worried about the market going up maybe 10 or 15 points in the S&P cash. If it's, let's say it's 75%, it's going 15 points higher. But if there's a 25% chance it goes 100 points lower, am I bullish or am I bearish? To me, it is very, they've got those hash marks on the football field, and you either have a little bit more room on the right or a little bit more room on the left. When you start and hike the football, the question is, you shouldn't ask just whether or not the percentage is higher, but how much higher, the amplitude that is higher. And right now, I think we've got a fairly good signal out here that Amazon has hit its high. It is significantly lower and has continued lower under its 3x3 displaced moving average. Is it instantly going to go to 600 to 650, probably 625? The answer is no, but my guess is that over the next, 4 or 6 months, we could see it back here in the 625 area. We'll be back after this short timeout.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special 1-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 1-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long, short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Get a chance to look at a couple more stocks. If I'm wrong, I'm always looking at stocks that seem to have lighter volume as they hit lows. Williams-Sonoma is one of those. Kind of like the way this thing's hitting. Unfortunately, it's still under its previous low of May 18th. It was $47.33, 3.7 million shares. Lighter volume today, just 1 million shares. So we're into that with, a little less than a fourth of the volume, a little more than a fourth of the volume. Light volume so far.